Good day. Thanks very much for having me today. My name is Fortune Mojapelo. I am a co-founder and CEO of Bushveld Minerals Limited. We are a vertically integrated primary vanadium company that is not only a significant producer of vanadium to the steel and chemicals industries, where we supply about 3.5% of the global market and growing, but also at the forefront of driving vanadium's place in the very exciting and growing stationary energy storage industry. We produced 3,600 metric tons of vanadium in 2020, which is just about 3.5% of the market. We are set to grow this to between 5 and 5,400 tons per annum by end of 2022, based on the refurbishment program currently underway at Vanchem, one of our operations. And we have a medium-term plan to increase this production further to about 6,500 tons and longer term to 8,400 metric tons of vanadium per annum plus. So we have a very positive outlook on the vanadium market. We believe that it's a market that's growing, and we think we're very well positioned in terms of growing our production into this market.
Fortune, lovely to see you again. Thank you for coming back on the show. You just put out your first half operational update. I think if we were having this conversation last week, there didn't seem to be much of a reaction, but this week there is. Can you explain why?
Look, I think it's good to see the positive uptick in our share price. I think, I'm on record as having said, I believe that the share price of this company does not yet reflect the true fundamental value. That's reflected in some of the things we're going to discuss and talk about today. We had a difficult Q1 in terms of our production. I think it's fair to say in terms of our volumes there. I believe that we have turned the corner. We had a 35-day extended maintenance shutdown program, March, April, which has seen our production stabilize at Vametco, and we are very happy to see that operational stability become an ongoing feature of our operations there. In terms of production levels, I think in Q2, during the months of June and July, we saw production of 278 metric tons of vanadium and 261 metric tons, respectively. That's even already higher than the new baseline of 240 metric tons of vanadium per month that we guided the market. So that for me is positive. We are seeing that trend continue. So we're very happy that I believe that we've got this plant on the right footing. We have new leadership in place in terms of operations leadership. We appointed an operations director at the beginning of 2021, who now has a fairly solid team overseeing Vametco, Vanchem, and will also include the electrolyte manufacturing plant and Mokopane, which is where we've got that mining right. And I think one of the values of establishing this leadership team is that we've brought in someone with a lot of experience running large, complex operations with some good turnaround expertise and experience as well in form of Francois Nodier. And he is doing a great job. And I'm excited that we now have, I would say, a really good platform, both at Vametco and Vanchem, to drive our production going forward, including the growth targets that we've set ourselves.
Vanadium is volatile. It has been a quite volatile ride, right? So 2019 we saw some, price spikes driven by, China regulations changing. We saw a little spike at the beginning of this year for you in terms of the way your shares reacted. What's going on out there? Because it seems to be that there's stuff that you can control. You've made some new appointments. You've had to change your guidance to the market, and then there's the vanadium market proper, which is traditionally stainless steel. People like to talk about VRFBs, but there's a lot of moving parts here. So what should we be focused on?
Well, for us as a company, our focus has always been make sure that you're producing vanadium as cheaply as possible, right? And one of the drivers of our cost of production is increasing throughput through our plants. We expect to see a significant improvement in our cost position. For example, in 2019, we had a group average peak unit cost of vanadium of about $37 per kilogram B. Last year, in 2019, we produced 2,931 group-wide. Last year, our production had gone up to 3,600, and our group per unit costs were down to about $29 per kilogram V. So there is significant fixed cost dilution that comes through as you increase your throughput through this plant. It's important that we make sure that we are producing as cheaply as we can. That's in our control. I think that as a primary producer, when you look at the overall industry, we are still very much a low-cost producer in the first quartile of the cost curve. You want to stay there because ultimately, notwithstanding the volatility in the vanadium prices, we believe that if you're a low-cost producer, you will generate margin. Now, I should make the point that when we look at the market itself, in terms of market demand-supply balance, we still believe in the thesis of a structural deficit in the vanadium market. One that we think will actually grow as vanadium deployments through vanadium redox flow batteries in the stationary energy storage space continue. Vanadium consumption in steel will continue to grow. We see intensive use of vanadium increasing across the board. In China, of course, it's driven by new standards being enforced with greater effectiveness. But you will have seen also more recently the United States that there was a bipartisan approval of an infrastructure program. So we've long talked about markets like that will also start coming through with their infrastructure programs. Which will boost steel demand and in turn will also boost vanadium demand. So we still see the steel sector providing very good base for demand, growing, in fact, going forward. Then you've got the energy storage applications, which we think will produce a step change in the demand profile. Supply, we still see it concentrated and constrained, particularly around the core producers who you can imagine at these kind of steel prices we have today and with what we've seen with iron ore prices, number one, are producing almost as much as they can produce really at capacity and producing exclusively using their feedstock magnetite deposits that are vanadium, which means that the scope for them to increase vanadium production through slag, very, very limited. New steel capacity in China, we don't see it being of a co-production type. We see it targeting more hematite or scrap through EAF technologies. So when you look at that supply picture, we think ultimately you've got a structural deficit. And it's a deficit which we think primary producers are best positioned to meet because of their low-cost production base, because of their margin capacity and their cash flows, which means that they're able to scale up production on a brownfield basis. They can do it cheap, and they can do it quicker than anybody trying to build a greenfield plant.
Okay, so the thesis, as you've laid out, structural deficit coming, you need to have a platform and you need the ability to supply into that 3.5% at the moment. You want to do more. I get it. So if people believe that, then they should be looking at you. So let's talk about what you're doing at the moment, right? You've had to change your guidance this year, and you've also recruited a new ops director effectively to come on board. So what's going on there?
Look, I mean, the recruitment of ops director was something that we were always going to do. You'll recall we started off with a single plant at Vametco. We've got the mining right executed at Mokopane. We acquired Vanchem, and we've now started construction of our electrolyte plant. So the number of operations and the complexity is growing. So you need to make sure that you're providing sufficient leadership to that. Secondly, it's quite important that we make sure that while we do that, our core operations, which is Vametco and Vanchem, are operating well. I mean, these are old plants. They need to be managed well. And there are a few things that we have changed. Part of the leadership team that Francois has includes someone who's, focused on the disciplines around our maintenance practices. And secondly, we're introducing much shorter interval controls in our operations to make sure that if there's anything that goes wrong, we can intervene much, much earlier. People leadership in terms of developing the depth of our technical team. These are just some of the things that we're changing. But I think one of the more significant changes, Matt, is that the manner in which we look at guidance is shifted. We believe this is a plant that can produce more than it is doing today. But when you set guidance, you need to set it on the basis of what your plant has historically demonstrated it can produce. Because if you don't do that and you set it based on aspiration, you run the risk of spending the rest of your year catching up. And we did that last year, and I think it came back to bite us. Last year, we had that COVID-related lockdown where we lost about a month's worth of production. And we didn't do our maintenance shutdown. We spent much of our time trying to also catch up to a lost production. And that caught up with us January, February of this year, which is why we decided on that extended 35-day maintenance. But also we decided that we would rebase Vametco particularly to 240 per month and in metric tons of vanadium production per month. Which it has done consistently historically. Let's prioritize operational stability. Let's make sure that there's little variability in our key technical parameters in the plant, your recoveries, your availabilities, your throughputs, etc. And when you get that right, then that gives you a solid foundation on which you can look to increase your production. And by the way, we do think there is opportunities to increase production, but only when we've demonstrated that sustainably over a period of time can we start backing it into our guidance. So those are just some of the shifts, Matt. And as I said, that we're starting to see the benefits of that in the operations. And I hope that that's a sign of good things to come.
Well, it sounds like growing pains and growing up from you guys in terms of the way that you approach this. Because let's remember, 2016, you're an exploration company.
You couldn't have said it better. We were an exploration company with about 30 people and just completed a pre-feasibility study. And as you know, with PFS studies and all of that, you're using consultants. And all of a sudden, 2017, with the acquisition of Vametco, you shift into a producing company with 450 plus people. And let's also remember that, when you look at vanadium production, many people miss this part, that it's a complex plant. It's a complex flow sheet. For the most part, if I give you the example of the chrome industry, you will mine, you will crush, you will do your, milling, and you produce your concentrate. What do? We mine, we crush, secondary, tertiary crushing, milling, and then max separation to produce a concentrate. That's only about 20% of the way, right? And we're not selling a product yet. At that point, we now go into the kiln roasting. Then we've got a hydromet process afterwards with the leaching circuit. Then after that, you get another pyromet process where you produce nitrovan. So what I'm saying is you move from an exploration company overnight into a company that is owning a fairly complex processing facility. It's not an excuse, by the way. It's just a reality that requires you to just grow up fast. And while you're still doing that, you acquire a second plant. Now, someone could say, and I've heard somebody say this before, why don't you just wait and just bed this down before you go on to make another acquisition? Well, and if you remember also, we completed the acquisition of Vanchem in 2019. Average prices in 2019 were about $50, but prices had already kind of been coming down. But the reason we still went ahead with that acquisition was that we understood the world is going to require a lot more vanadium into the future, number one. Number two, it's going to be primary producers, in our view, that are best positioned to respond in this. Number three, if you're going to try to build a greenfield plant, you're talking hundreds of millions of dollars. If you're talking a brownfield plant, you can do that quicker and you can do it cheaper. And Vanchem was the last operational primary vanadium plant that was there. So it was quite strategically important for us. And I'm leaving Vindamura out, which is in Australia, which is not yet producing, which is still not producing yet. So we took the decision to acquire that plant, Vanchem. So now you add an additional plant and your employee numbers grow and you're now managing across multiple sites. I think that when you take all of that into account, the amount of growing up we've had to do is not insignificant. And I should say this, that we are up to the challenge. Vanchem is doing well from a stability point of view. We are, underway with our refurbishment program at Vanchem. And I believe that we've come a long, long way. And I believe that also we're very, very well positioned, not just in terms of the production of vanadium, but in terms of, the opportunity within the energy storage space, which we have for 5 years played quite a key role in shaping, leading, putting in place the necessary building blocks. And I think going forward, we start to see an acceleration of those initiatives.
Okay, so you brought Francois in, you brought one guy in. Are you and I appreciate you've been driving down the cost as well, right? So
not one guy. We bring in Francois with a team. He's got a team, group lead for maintenance. We have someone who looks after we've got someone who looks after who look after our projects. So there's a team around him.
All new, brand new.
Well, not entirely brand new. We've moved some people around as well. We've restructured our operations to make them a lot leaner and just to focus them at the sites on key deliverables of production and cost, and making sure that license to operate is maintained in terms of environmental compliance, safety, health. So we've done some changes in our structure, which I think are good in terms of producing a much greater level of focus at the operations and providing higher level strategic guidance at the level of our operations director. We will likely still grow that team more, but that's already quite significant incremental capacity we've created.
Right. Okay. So you've reorganized the workforce around the new guy coming in with the relevant experience to allow you to optimize the production side of things, reducing costs, all of the good stuff that you meant to do. Right. So let's talk about the stuff that you can't control in terms of pricing. We talked about structural deficit, but today, how do you operate in this market today? Because as a financier looking in, I'm going, vanadium is all over the place. I can't quite actually work out some kind of steady, sustained stream of cash flow for you. And I don't know what my margins are, although I appreciate you doing a good job. Great platform, driving costs down. You've got the production capacity there. So all the kind of good stuff that you can control, you're doing well. But when you're having conversations with bankers, with financiers, with the market, about why this thing is going to work, what do you say to them?
I say to them, firstly, if I'm in the first quartile of the cost curve, you know that I have a good business that will generate margin, even if it may go through periods of difficulty. Look at this. Between 2018 and 2020, right, cumulatively, we generated about more than 100, let me put it this way, we generated about $120 million in combined EBITDA. Right? We lost $15 million last year. That was our EBITDA loss. But before that, we made, $100 on $1 million. In 2018, we made $32.6 million in 2019. So you got to kind of look at it through the cycle and make sure that you have a low-cost production base. But then the second question you have to do is you have to take a view on where you see the market, because that informs how much endurance you're willing to take during the down cycle. Now, I talked about the market supply-demand balance, and I talked about the fact that I think that the future in terms of growth really lies with primary producers. They're low-cost producers. But if you look outside of, let's talk about primary producers. You need grade. And if you look at the projects that have been announced out there in the market, you're going to find these projects in Australia, in South Africa, or Brazil. But if you're in Australia, your typical grades are in the order of 1.1% V2O5 in concentrate. And so what is the incentive price you need on a sustained basis to support the development of new plants? That, I guess, is the question. And I would venture to say that when you've got grades of around 1%, and assuming you can access some debt, which is a difficulty still for vanadium, for greenfield vanadium projects, the price point you need to support projects like that, it's significantly north of, your $45 price per kilogram V. If you got projects in South Africa where you've got good grade, again, assuming you can get debt, you're still talking prices that are significantly north of $40 per kilogram V. So the point I make here is that as long as you can have an operation whose cost of production is sub $30, you've got a good operation and you're going to generate margin through the cycle. And that's why I think a primary producer is in a very, very good position. We don't have control of where the prices go. As we look forward and as vanadium flow batteries, take up a greater, as the momentum continues to build and they take up greater and greater market share, we hope that we'll see more stability of vanadium. With the vanadium lease construct, in terms of the lease renting of vanadium electrolyte into these batteries, we're comfortable also that at vanadium prices of between $40 and $50, you still actually can deploy VRFBs on a very cost competitive basis. So based on all of these considerations, Matt, we will not speculate and forecast what the price is going to be, but we can only look at what kind of incentives price you're going to require to stimulate supply, and then say, is that incentive price good enough to get more primary production going up? Number one. And number two, is that price not too high so as to be to have a dampening effect on the deployments of vanadium redox flow batteries? And that's why we love that $40 to $50 kind of sweet spot for vanadium prices. We think that it's great for new supply development, as well as for promoting the demand side through VRFBs and the energy storage space.
Do you think you've got the business model right? And what I mean by that is, we've been talking about the mining component, and obviously you just mentioned something which VRFB, okay, the vanadium redox flow batteries. One of your big competitors has gone down the industrial chemicals route. We're certainly talking about it. Whether or not you believe they can do it's another matter, because it seems to me that vanadium companies need to kind of smooth that curve, and not have to think in terms of cycles, but in terms of people's perception of where the revenue or future revenues coming from, irrespective of what the vanadium price is doing. So is your model fully formed yet?
Our model is fully defined, and we're just busy executing it. We've often made the statement that the energy storage applications of vanadium provide a natural hedge for vanadium price volatility, because when vanadium prices are lower, that helps the cost competitiveness of vanadium redox flow batteries. But keep in mind that the margin opportunity within that value chain itself through a vertically integrated model, you're able to tap into that. Right? So all in all, we started talking about a vertically integrated platform years ago, and I'm very pleased to see how the vanadium companies kind of, pick on that mantra, because it is important, particularly if vanadium redox flow batteries are going to be successful, that upstream producers go downstream and integrate vertically. And there's a lot of benefit for that, particularly around the point I make, which is that it provides a very good, healthy, natural hedge.
What about the industrial chemical component? Do you think there's any possibility that you'd look at that?
It's always going to be a small part of the vanadium market, in our view. But of course, if you include electrolyte, then it blows up, right? It becomes much, much bigger. And the production of electrolyte, 200 megawatt hour electrolyte manufacturing plant we're building will entail 1,100 tons of vanadium per annum, which is a significant share of our vanadium production already. So, the electrolyte space will be the dominant share of vanadium within the chemical space, if I can put it that way.
Okay, and I think it's connected. So I want to ask that you've got some litigation going on at the moment. Is that a big distraction? What's the actual knock-on effect of that should you lose?
Yeah, look, all litigation is a distraction and a nuisance. I think we can be candid about that. As we said in the announcement, that litigation really is around our joint venture agreement with our partner Garnet, and it centers around the investment by Mustang into our structure called VRFB Energy, which owns 50% of Eneros. Now, if you go back to interviews we've done, if you read our material, you'll see that when it comes to manufacturing of vanadium flow batteries, if you look at our Bushveld Energy strategy, one part of it is we're going to produce the electrolyte. And secondly, we're going to deploy a rental product, which we think is an important catalyst for the success of vanadium redox flow batteries. We're also going to take advantage of the fact that we are a customer ourselves in terms of our power consumption, and hence the mini grid that we are doing, 3.5 megawatts of PV solar and 4 megawatt hour VRFB, which is really a pilot if you think about it, because we need a lot more. So we'll scale that up significantly. We've said that the opportunity space is as much as 125 megawatts of solar PV and 180 megawatt hours of battery energy storage. When we're operating at full capacity, that's the kind of scale of the opportunity. And that's just us. And before you consider other companies who, looking at the success of our mini grid, we believe that there will be opportunities, particularly in South Africa, where the self-generation is increasingly encouraged among big power consumers, right? So when you've got the electrolyte manufacturing, electrolyte rentals, and you've got a really good, sizable market opportunity that you can deploy batteries into, what the VRFB manufacturers need is to scale up. Now, we don't want to reinvent the wheel. I think we've always said that. We don't want to start an R&D company to try and develop our own battery. What we want is the credible VRFB manufacturing companies out there to scale up production capacity quickly. And we believe also that there's significant commercial upside in these companies, because if you think about it, we're de-risking them on the upstream side in terms of vanadium supply, in terms of electrolyte supply. We're also de-risking them in a huge way in terms of the market opportunity for deployment of these batteries, because we are already a market and we're creating a market, particularly in the areas that we operate. So what that should allow us to do is to mobilize funding to support these companies. I mean, we did this with Invinity. We put in $5 million into what was then Avalon, on a condition that they merge with what was then Red T to create Invinity Energy Systems. It's listed, it's successful, it's growing, and we've exited that. We made good returns on that. But, in addition to that, we have collaboration around the rental of vanadium electrolyte and the right of first refusal to supply vanadium into that. right? So when you look at that, for me, it's a big tick. When it comes to CellCube, that was a similar approach in terms of bringing in investment partners. We brought Garnet in as a partner to invest in all of this, but we were always quite clear. I think the difference between CellCube and Invinity is that where in Invinity we had only an 8% interest, in CellCube slash Enerox, we have a 25% interest, but we have a controlling interest over a 50% shareholder. We did that deliberately, and there was a strategic rationale for us doing that. So I'm going all this length to make the point that, what was the motivation for us was to try and mobilize capital so that it's not solely dependent on our balance sheet, and we can scale up production capacity quickly. One of the risks, of course, you always enter into when you bring in partners is that you can have disagreements. In this instance, we had a disagreement with Garnet, which we hope will be resolved. Obviously, we hope that will be resolved in our favor, and because we think that it's an important company with a great future.
But I think once things go to litigation, the kind of relationships seem sort of irretrievably damaged. Can you work with them going forward, no matter who wins?
I think we all have to be grown up about things. That's all I can say. It's an important company. It's going to play an important role in the energy storage space. It's important to Bushveld, and I imagine it is important to Garnet as well. We want it to succeed. Right now the company is operating. It's got a management team. It is funded. We raised $30 million, and it is continuing to develop and secure projects. So, and we'll continue to obviously support that goal. Ultimately, when it's all resolved, grown-ups will make sure there's still a company that's growing and that's making money.
Okay. I guess one thing may have gone in the favor of the VRFB companies this week was a small fire in New South Wales. Or was it Victoria? Somewhere, Southern Australia.
In Australia, yes.
Yeah.
So here's the thing about that, right? I mean, we've always talked about the fact that when it comes to stationary applications, long duration applications, we think that flow batteries are the answer. The United States government has said as much themselves that for grid scale storage, they believe flow batteries are the solution. Noting, interestingly, that vanadium flow batteries are the most mature amongst the flow battery technologies. The only concern that they raise is about availability of vanadium, which I would say to them, there is more than enough vanadium in the world. We just need to scale up processing capacity. The lithium-ion industry and the fire hazard, it's not new. I think if you read our presentations, we do talk about the thermal runaway risks associated with lithium-ion technologies in the stationary space. I don't think that problem has been solved. The lithium-ion industry still need to find solutions towards this. And I hope they do. And you might find it intriguing that I say that, but it's because the stationary space is that large. I don't believe that vanadium flow batteries alone could adequately meet that requirement, right? And when you add other technologies for that matter, it is going to be huge. We're talking 100 gigawatt hours of new stationary energy storage deployments per annum by 2027, according to Navigant. So I think that in time, hopefully they will find some solutions. But it's an opportunity for vanadium flow batteries. And vanadium flow batteries capture only just 20% of that market. We will need a humongous amount of vanadium production, in new production, to come on stream over the next decade. So I think that we certainly intend to shout as loud as possible about the benefits of VRFBs in the long duration space. They are inherently safe. There's never been a fire with a VRFB battery. It doesn't happen. they are scalable in long duration applications, and they are cost effective. They're long life. I mean, I can go on and on. The fact that we can rent the electrolyte into these batteries means that at the end of the life, because there's no degradation, we can use it in another battery. And we can also take that electrolyte into our facilities and convert it into ferrovanadium. So you don't need to build new complex recycling facilities for vanadium electrolyte. So for all these reasons, I think that it's a good opportunity for vanadium redox flow batteries to step up and take their position.
Well, there's a few things going on in the States, and it seems to me a lot of the agenda and narrative is being driven out of there at the moment. Obviously, you've had the Section 232 announcement recently. We should probably talk about. You have got the big green deal, the big initiative by the US government to start, either focusing on critical minerals, security. Yep. Two is obviously electrification of a lot of industries, a lot of in terms of not just the OEMs, but just across the board. We're seeing boats, planes, everyone getting involved now. For VRFB as a use case for long-term storage of energy, the tone is being set by the States. How do you, as a company, take advantage of that? Because at the moment you're talking like a miner, right? But you got more excited about the VRFB future there to me. So what's that time frame look like? How do you start? I know you said you've got a very clearly defined business model, but how does that evolve? How do people start seeing this consistency of revenue stream by leasing your electrolyte into VRFB batteries? How does this evolve? How does the company move forward?
So we are moving forward. I think again, if I talk about the VRFB space, the electrolyte manufacturing plant is an important part of that. Writing more contracts for leasing is an important part of it. We've articulated a 3-stage implementation plan in respect of our electrolyte plant. What we mean by that is we said we'll start off writing contracts in using our own balance sheet. And then we will look to write bigger contracts. We did a deal with Infinity and Pivot Power, which is part of EDF. And we will provide electrolyte on a rental basis. We continue to explore more rental constructs. Our own mini grid is going to have a rental contract there. Ultimately, we want to create a platform that will rent electrolyte out into the broader industry, and we think that platform needs to be scalable. We're doing that because we're seeing the global market opportunity is there. The manufacturing of the VRFB is through CellCube is an important part of it. So that's what I mean, that it's a strategy in motion, in execution. The US market you made mention of course, we're delighted with that Section 232 outcome, where the government basically decided that imports of vanadium into the US did not pose a national security threat. And I think that was a right outcome. We invested quite a lot of energy in responding in that investigation and contributing to it. Very happy to see that we were cited in the report, which I think gives is a positive affirmation. Let me put it that way of our views around the vanadium market. And the US market, we supplied more than a third of our production into that market. So it's an important market for us. We think it will continue to be an important market. Diversification geographically is important as well. Of course, we've increased production into China and into the rest of the Asian region. We continue to explore opportunities. But we couldn't be more delighted with the Section 232 outcome. As you already have alluded to, the infrastructure build program, the kind of aspirations that the Biden administration has made in terms of curbing climate change, in terms of transition to cleaner energy, all of those will make that an important market, even for not just for vanadium in the steel sector, but for vanadium in the energy storage space.
But is that where does your company end up? Because you're going to go where the margins are, right? You're going to create products where the margins are. Does that mean stainless steel will eventually take a back seat? for you, or have you got other plans?
No, I think it's you're talking about applications of vanadium in the steel sector. I think that will continue to be important. It will continue to be an anchor for demand for the foreseeable future. And we think, by the way, with very good margin opportunities for us. I would say that in terms of the energy storage space, it'll support demand, and participating in that value chain means that there's economics that we unlock there for ourselves. You'll appreciate that the business model for an energy business is not the same for a mining business. The business model for a rental entity for vanadium electrolyte is different from the business model for an IPP developer, for example, that is deploying PV solar or wind plus storage solutions. And I think one of the things that is a priority for us as far as energy is concerned is to help the market get an appreciation of those business models and understand how do you attribute value to what we're doing in the energy space. I mentioned the term building blocks earlier on. All of these things coming together, we believe we're in a position where we can start to articulate the value proposition of Bushveld Energy in a very granular way. And there is a strategy as far as that's concerned. I won't go into too much details about that. But, yeah.
but I think that's what it feels to me. That's what the market's looking for, because you got them excited about it a couple of years ago, right? And what I want to hear is there's a big long annuity stream of cash. There's a kind of base from which you can build, as opposed to just selling vanadium into the stainless steel market, because that's exciting. You can borrow against future revenues. You can. It's a step change for the company if you can get to the point where you've got enough of those contracts in place. So that's what I'm excited about when I'm listening to your story. But I'm trying to understand the timing of that, because you're right. There is no scale with the VRFB companies. There's no consistent technology yet. So you gotta hook yourself up to the right team.
Yeah.
How do you do that? I know you've got some partners now, but you may change your mind. You may need to change your mind.
Look, we will. With time, you will get to see more and more about CellCube, for example, and its contracts that it's winning and the revenue model for that. You can, by the way, if you wanted to get a sense of what that looks like already, just take a look at Infinity, right? Because it's a similar business. The more contracts they write, the more revenue they're going to generate, and earnings, I should add. But that's not years to come. CellCube Enerox is producing batteries today. It's deploying them into the market. I would say also that as far as the rentals are concerned, we are writing contracts, and we're pursuing more contracts, and that will itself also come out. I think that the thing I'd say, Matt, is that if an analyst is looking at Bushveld, and if you read the analyst reports that are there, a mining analyst understands that upstream part of our business very well. Yeah. And you typically find that there's not as much written about the downstream side of the business. If I went to capital goods analysts who are always active in this energy space, they'll probably have a lot to say about our energy business and much less about our upstream business. It's a structure of the capital markets the way they are, right? We still kind of classify it as a mining business. And I dare say we're not just a mining business. We mine. We're also a manufacturing, processing business, and we're an energy business. So how do we position Bushveld Minerals in the capital markets in a way, number one, that people who write about it, that we bring the right people to write about it across the value chain, right? Not just the upstream. Secondly, in a way that we can attract the investors who are particularly interested in aspects of what we do. The investors who love the mining and the processing part of our business, they get it, and they can make investment decisions based on that. But the energy piece, they don't quite get it. Then you got investors who get the energy piece, the upside, and are keen to get into that, but they don't see Bushveld Minerals as an energy play. So how do we create pathways for both of these investors to participate in the story that we're doing. And that's part of what we're doing when we talk about our capital market strategy. Again, I'm not going to say too much at this stage because it's a work in progress. Suffice to say that those are some of the challenges we're solving for.
I would like to see you come to market and do that, because I tell you what investors like more than energy companies or mining companies, and that's money. And if you can get that mix right and tell that story well, I think you can get that re-rate that you're looking for. And that's why when we talked about your competitor of yours, large competitor of yours, trying to position themselves as an industrial chemicals company, it's because the multiple on those are bigger than mining companies. It's a smart move.
I was about to say exactly that point, which is the valuation metrics are also different, right? They're different for a mining company, they're different for a manufacturing company, and they're different for a tech play as well, right? I mean, there are companies that are worth hundreds of millions of pounds, and all that they are doing is acquiring renewable energy projects. Now, renewable energy projects, I'm talking about in these projects where you've got a PPA for deploying a 30 megawatt power solution here, 100 megawatts there, and then you've got this company say, look, we've got 300 megawatts in our portfolio. They are annuity businesses, yes, because of the PPAs. They're not massive margin businesses, right? But they're annuity businesses, and they've got a good asset base, and it is growing. And guess what? Look at their valuations and their valuation metrics. They're great. So we want to tap into that as well. But again, we've got to do it in a very thoughtful, in a very methodical way. And all I'm saying is we are engaged with that, and at the right time, we will communicate.
I'm looking forward to that one, Fortune, because I think that's a real moment for me and your story. But in the meantime, continue to operate efficiently as you are. Stay in touch and let us know how you get on. Okay,
Matt. Before you go, I'm going to say one final thought.
Okay,
and it is the following: in 2016, when I just completed our pre-feasibility study on our Mojapelo project. We were talking a lot earlier on about how we've grown as a company. We articulated that we're adopting a brownfield strategy. We're going to look for existing assets, whether we need to refurbish them or repurpose them. And that's how we saw ourselves developing from a company at the time that was valued at about 17 million pounds. Faced with a project that required about $300 million in terms of capex on a greenfield basis, mine processing plant, that's the Mojapelo project. Since then, we have acquired Vametco, we've acquired Vanchem, and if I add the capital expenditure that we have put in to May, we're looking at a total of about $150 million, right? Even then, we have created a platform whose replacement value, if you're building on a greenfield basis, is several times that investment. But more importantly is that we've done that and funded that leveraging cash flows that the same assets have generated. And because of cash flows, we've been able to also bring in debt. We've raised only over that period of time, cumulatively about $61 million through equity instruments over about a 5-year period. And within this number, I'm talking about warrants that got exercised, convertible notes that got converted into equity, right? And about $73 million in terms of just pure debt instruments that we're able to bring on board. And so if you look at it, the point I make is that we have built a platform that would have cost us many times more than it cost us. And we've been able to fund that through debt and through limited equity investments to a place where today we've got a huge resource base. We've got these 2 processing plants with capacity to scale up our production to about 8,400 tons. We funded to 5,400 by end of next year. And we've got an energy platform that is really exciting and well on its way to unlocking value. So the point I wanted to leave it at is that transformation, really positions us today with an asset base, with the right strategy, I think at the right time as well in terms of developments in the market for what I think is an incredible future for the company.